Welcome to Markets Now. I'm Michelle, work with Brian Splitt with agmarket.net, and lower prices except for the hog market right now. Grains seeing some losses after the USDA report, and we did see increases in yield, production, and ending stocks, Brian, for both corn and soybeans. Not a lot that was bullish in the report.
No, there really wasn't. The yield number for corn was a bit of a bearish shocker. The agmarket.net group did submit a 173.5, which would have just been a half a bushel increase. The number came in at 174.9, so it was 1.9 bushels per acre above and beyond the October WASDE report. That was not as bad as it could have been because the USDA did offset quite a bit of that additional production with additional demand. They increased ethanol by 25 million bushels, and they increased the feed residual and export category by 50 million bushels each. So 125 million bushels of extra demand definitely kept that report from being kind of a knock your socks off bearish type number.
Yeah, this kind of bucks the trend, though, usually from the October to the November report. Usually yield, if it's going down, it keeps going down, doesn't it?
Statistically, that's the case. But when you kind of listen to what's been going on out there and a lot of the reports about corn, especially based on what we saw with the weather in August, yields have been better than expected for a lot of producers. So that's what caused us internally to raise our estimate of corn. But the amount that they raised it was a bit of a surprise.
Yeah, definitely have been hearing that out in the country as well, Brian. We did take out the September low here in that December contract this morning. So now where do we project to, or do you think that's significant?
Well, I think there's a couple things we can look at for maybe some downside targets in corn. First was just the fact that the September contract had expired at 462.5. The day that it expired, it made a new contract low to 455 3/4. And so when we think about the typical behavior of a bear market, usually the next contract will go and revisit that expiration price. So 462.5, definitely a very viable target here. That's not much lower. That's 4 cents lower than the low post report. The other thing from a chart perspective, we had some very distinct lows in July of 2022, then in May of 23, and then we had our July lows of 23, August, September. And so all those lows are along the same line. That line does go down as time goes by, and that line is going to come in just south of 460. So somewhere in that 455 to 462.5 seems like a good downside target prior to expiration. And then typically what we do when we do hit that line is you'll have a 2-day low. You'll hit the line the first day, then the second day you'll hit it again and have an up day, and then we seem to see short covering from there.
And Brian, soybean yield up about 0.3 bushels per acre, ending stocks up 25 million bushels, so a little bit bearish there as well.
Yeah, the bean number was, they raised the yield number, and actually agmarket.net did submit a 49.9, so that was the same number the USDA had. Same reasoning as corn. We just thought that we were going to see a little bit of an uptick in yields for both products, or both crops, I should say. No demand adjustments there, so the carryout did go up to 245 million bushels. It's tough because you still have this South American story going on, and it seems like the weather forecast right now still looks to see the current pattern maintain, and that is dry in the northern growing regions, Mato Grosso, and then too wet down south, and that wetness has been exceedingly aggressive rainfall. In the feet, we're not measuring by inches, we're measuring by feet now. Yeah. So if that type of pattern continues, we should see some further concern about Brazilian soybeans and eventually reduction in production estimates. CONAB this morning did increase their estimate of bean production out of Brazil, and they lowered their estimate of corn production out of Brazil. Most of that increase in production came from the Rio Grande do Sul region, which is one of the southern growing regions that's benefiting from rainfall but not seeing the torrential rains. So this is going to be an ongoing story in beans. And I'll say we have a head and shoulder bottom in beans that projects to about 13.97 on the January contract. We've yet to hit that. We did fail at the downtrend from the July highs to the August highs. But what we did after that report release this morning is we went back and revisited the neckline of that pattern. So That was about 13.35. We had a 36 low right after the numbers dropped.
And we got all those big export sales reports here, the flash sales on soybeans yesterday and today, but the market had really already traded that, right?
Yeah, I mean, you could probably argue that that was part of the reason why we went up to that 1380 area earlier this week.
Yeah.
And I think the market was reluctant to buy this morning's flash sales report just because the USDA report would be coming out a few hours later. So I think they wanted to see what that had to say first. But I do also think that that's why the bean market has come off of those lows. I mean, we hit those lows and we were 10 off of them pretty quickly. So maybe the market trades the USDA numbers for the first half hour or so, and then goes back to the idea of the export sales. And so we had some weekly export sales this morning, a little over 1 million tons for the total for last week. But when you fast forward to next Thursday, when we get the weekly totals for this week, they're going to be close to, if not over 3 million tons of sales for the week. If we have another flash sale tomorrow, they'll be at least about 2.9, even if there is no business announced tomorrow. So that's a very, very strong week. And I think it's evident that China is concerned about the South American forecast and wants to get ahead of the curve.
Absolutely. Yet USDA did not make any changes or revisions in South American production. So it's still too early for them to do that.
It is. That would kind of be like the USDA changing, bean yield in May for our domestic numbers. It's just really too early to make that type of a change based on the weather. So as you get into late December into January, that's when the weather is going to be really critical. And then as we finish the crop in February prior to harvest. So I think there's still an awful lot of time for the weather to continue to add additional concern if the pattern looks like it's stuck. But we have to remember we're so early in their growing season that if we do start seeing the pattern change and we move to getting rain where we need it, where it's been dry, and see a little bit more moderate rainfall in the southern areas, which at this point have very plentiful soil profiles, we could still have a very good crop out of South America. Plus last year's concerns was Argentina. That was where the drought was last year. And Argentina's definitely had some rainfall over the last couple of weeks that's improved the scenario there. So I think it's going to be another couple months of volatility here for sure.
Yeah. Wheat ending stocks raised 14 million bushels. On the domestic side, we were up almost 500,000 metric tons globally. Not a big change there, but that wheat market just cannot get off of dead center here or, reverse trend here. Demand seems to be an issue, although USDA did not revise exports.
Yeah, SRW demand's been better than HRW, so you've got some bright spots. But HRW still priced quite a bit over SRW. We definitely have a downtrend that's in place, and it just hasn't. We haven't gotten any news that's been able to shake that. We did have some pretty big moves higher yesterday, some aggressive short covering the day before the report. I think early in the day, wheat was up about 30 before pulling back into the close. So you're going to see days like that, and maybe that was just driven by some profit taking prior to the report. But you still have a problem with Russia offering quite a bit of wheat to the world. And it's just one of those things here where wheat got way too expensive based on concerns about Ukraine. And that pendulum can be pretty nasty when it swings the other way.
And it has in a big way. And the funds are super short in Chicago anyways. What about this cattle market? Boy, the charts were beat up before we got some cash trade news out of the South, 180 to 181. Where do we project to now, Brian? What are you looking at? How bad do the charts look?
Yeah, so I mean, I've been looking at the April contract for the most part. If you think back to kind of what we did over the last couple of weeks, we had that cattle on feed report that had the market really get flushed. We put in a low the Tuesday after that report. So the first day out of the weekend was a big down day, had a little bit lower trade the next day, and then came off the lows. And then we had a really nice recovery bounce. And essentially what we did is we went back and revisited some previous monthly lows in the April contract, about 188.85, got up to 189.02. That 189 area was also a 38% retracement of the move from the contract high to the low post cattle on feed. We failed at that resistance. Then coming out of the weekend, we gapped lower. So that's 2 gaps on a Monday in 3 weeks. We took out that cattle on feed report low, ran the stops. And as you'd mentioned, with the lower cash trade here today, futures are just getting really, really obliterated, down about $5 in some of these Feb April contracts. These are new lows for the move. So what I will tell you is that when we made that post kettle on feed report low and that bounced back up to about 189 on April, when you take the measurement and project that forward through the cattle on feed lows, that suggests we're going to revisit the May lows, which was 174.95. The measurement's pretty much right to 175. So could easily see another couple bucks come out of this before trying to bounce again. And then if you take out those major May lows, then that's going to bring in some additional technical liquidation. So hopefully we get a little bit of upside here, but the lower cash trade is disappointing. Now, December is trading about $6 to $7 below cash. So that is suggesting we're going to continue to see cash come down over the next month and a half. And hopefully we can see the cash stabilize. We really need that for the futures to stop breaking like this.
Absolutely. All right. Thanks for joining us. Brian Splitt with agmarket.net. That is Markets Now.